Good morning, everyone. Welcome to Coffee with Carlson. We're here today to talk to you about your business. Sorry, that sounded kind of weird. Good morning, everyone. Welcome to Coffee with Carlson. How are you today? I hope you're having a great morning. I hope you're having coffee with us, enjoying a nice, warm, strangely brewed coffee. Right, Dan? Right, Jeff? Welcome you today. The set looks a little bit different. We're going to be playing around with it. Last week, our sincere apologies. My producer completely picked the wrong microphones. We've got 4 floating around the studio. So the reason that the sound was so bad is because this microphone, no matter how close I hold it to my face, didn't do anything because we had microphones over there on a chair that we were recording on. So hopefully this works a little bit better. He was also critiquing this morning, saying Joe Rogan looks more engaged when he leans forward versus chilling backwards. So I'm leaning forward a little bit. I don't think I need to talk this close to the microphone, but we'll see. So we're going to continue playing with this. Any feedback, drop them in the comments below. I'm not that good of an editor yet, so I can't do that sort of stuff. Or click over here. Last week, I also told you we were going to put the link to YouTube. I failed to do that, so I'll put that up today. I promise right after the show, we'll get it running and let you look at it. So we told you last week, Season 2, I want to focus more on things that are happening in my accounting practice, things that happened during the week prior or before. I think right now, in the last couple of weeks, I've developed enough content for probably the next several weeks. If this isn't something that hits you, our viewers from Season 1, which was just a few weeks ago, then maybe your kids, brothers, sister, aunt, uncle, friends, maybe they can benefit. Send them a link. Let them know the show's out there, and we'd love to hear from you. So today I'm going to talk about something that came up twice in the last 2 weeks with new customers that came in the door related to starting a new business and especially related to entity classification. So I'm just going to give you highlights. Again, one thing that I think is very important as you start a new business is to get the proper counsel to help you figure out what's best for you. Meet with your CPA, meet with your attorney. Those are the 2 most important people when you're thinking about starting a new business. Once you talk to them a little bit, you've got your idea down, talk to your banker, your insurance agent, talk to them about, especially your banker, if you're going to need financing, you're definitely going to need to set up a bank account and have a business relationship if you need credit lines or anything like that, if you're buying equipment. So you need to set that relationship up, but start with your accountant and your attorney. It might cost you $1,000 to have those consultations. Here at Carlson Accounting, all new businesses get a half-hour free consultation. You can actually schedule that directly from my website, carlsonaccounting.com. Click on the button to schedule an appointment, and you can pick the time on my calendar that's available that's best for you. I'll automatically know about it. We'll give you a free half-hour consultation to help guide you and give you some of this information. We're going to try to cover it here in the next 20 minutes or so, just very broad strokes of entity classification. So let's get started. If I'm thinking about starting a new business, say I'm a widget maker. I make widgets. I'm a widget manufacturer. And the business for widgets, I hear, is extraordinary right now. There was a widget show in Tampa, and apparently they're sold out of them. So you can't really get them anywhere. So I'm thinking about making widgets. And in order to do that, let me throw a quick caveat out there. There could be local and state regulations or even federal regulations that are separate from what I'm talking about today. For instance, professional licensing to be a CPA or a contractor or a realtor, special insurance requirements.
You have a professional license?
Yeah. So you might have those. So I'm not going to cover all of those because there's a lot of them, from hair salons to accountants to lawyers. There's lots of different regulations out there, just broad entities. So if I want to start making widgets, I really don't have to do anything. I don't need to set up an entity. I don't need to set up any sort of a special name. I really don't even need to set up a special checking account. These are things I don't have to do. I could just start making widgets and start selling them. As long as I keep track of the income that comes in and the expenses that go out so that I can give them to my accountant to prepare a tax return at the end of the year or figure quarterly taxes or anything like that. I really don't need to do anything special. So if widget's not a great one, but let me think of a handyman or a carpenter that's thinking about starting out on their own, or a lawn mowing business. You could get a lawnmower, knock on your neighbor's door. Hey, I'd like to mow your lawn. They give you $20 or whatever it is. And you don't really need to do anything special. Keep track of your income and expenses separately, but you don't need to spend any money or do anything special. I wouldn't necessarily recommend that, but at that level, and I'll try to flow this through in some sort of logical manner. But in that scenario, say Dan Andrews wanted to start a lawn mowing business and he wanted to call it nothing, Dan Andrews. Then he doesn't need to do anything. But if he wanted to call it AAA Highlands County's Best Lawn Care, then that's what's called a fictitious name. You do have to do something in order to operate as a DBA or doing business as. So it's Dan Andrews operating a business as AAA Lawn Care of Best Lawn Care of Highlands County business name, and put that on business cards and put it on the side of his truck or his trailer or his equipment. You definitely have to go to the state of Florida and register for that. The website for that is www.sunbiz.org. Sorry. If you haven't watched Cobra Kai yet, that's a pretty funny scene from Cobra Kai. So, but you have to register a fictitious name. I believe that's $50 per year to register a fictitious name if you want to operate as something other than your given name. So if I want to set this business up, and then maybe I want to do it simply to see if it's going to take off. Lots of people do that. They don't really need to do anything. They can start mowing lawns, talk to their neighbors, grow it up. So if you're a 16-year-old kid, you could start doing that, keep track of your income and expenses. I start growing a little bit. I want to get employees. Now I'm getting a little bit more formal. So I need to think about, I'm going to have employees. I'm going to have to pay taxes. Now the whole thing gets a little bit more complicated. And if you're in that what's called a sole proprietorship world, that's operating without an entity or a corporation or partnership or LLC. If I'm going to operate in that world, you can still need to talk to your CPA and your lawyer to talk about, the lawyers are keen on the liability protection and making sure that you're covered there. And we're really help guide you into, how do I keep track of my expenses? And I've had I had one client, he used to take his receipts in his truck and stick them in empty Yankee Candle jars, put the tops on them, and bring grocery bags full of them at the end of the year. So we can help guide you and give you some tips on how to save you money when you come to see me, and also how to keep track of it so that you know, most importantly, you know how your business is doing on a month-to-month basis. So that's sole proprietorship world. The next step in the sole proprietorship world, and we might do, Dan and I were talking this morning, we might do another show on the liability side, which is not my bag. So we'll invite a guest on to talk about the liability protection side. But so all I'm going to say is that generally people recommend forming an LLC or corporation for liability protection. There are some other reasons, but that's one of the general rules to do that. If you're going to have employees and get a little bit more formal, then you want to form an entity. So one of the most popular ones that people really talk about a lot is, I'm going to form an LLC. And LLCs are kind of an interesting animal because the IRS doesn't recognize it. It's actually, from the IRS perspective, LLCs are called, defaulted to, if you're a single member, a disregarded entity, meaning that I can form an LLC, but I can still operate as a sole proprietor and file the business part of that tax return on my personal tax return. So the advantage to that is that, again, from the legal standpoint, you could have some liability protection there, but from an accounting standpoint, it saves you money, because I want your business to be successful and I want you to grow. I don't want you to give all of your money that you work hard for to me, only 50% of it. So that'll give you the opportunity to form an entity, get a little bit more formalized, and then you could move into an entity classification. Now, this is the part that's going to get a little bit confusing. And the reason that this is important is because I had a new client come in about a week and a half ago, and they were talking about a new business. They were getting ready to buy a business, and I asked them, how were they going to buy it? Were they going to set up an entity? What were they going to call it? And they told me that they had already set up a corporation. And I said, oh, that's great. Where are your articles of incorporation? And they said, well, we didn't get those. So I asked a little bit further, as we do, and asked questions. What do you mean you didn't get them? If you go to the state of Florida, even if you file articles of incorporation yourself, you still have to file the articles in order to get the corporation. And they said, no, all we did was we went to the IRS website, we paid $150, and we set up our corporation and got a tax ID number. So red flags went up for multiple reasons there. One, the IRS doesn't set up corporations or partnerships or anything else for you. That's a state level thing. It has nothing to do with the IRS other than taxation, right? The second thing was the IRS, when you go to get a tax ID number or an employer identification number for the business, they don't charge you. So I was a little concerned that there could be some security issues with whatever they did. So, but in their minds, they had set up a corporation, got a tax ID number, were ready to go, when in fact they had really done nothing. So the tax ID number had to go away because the entity didn't exist. So they then had to backtrack, go back. I recommended to go talk to an attorney, but had to backtrack to create an entity, tax ID number, go down that route. So it's very important to do this before you take those steps. It would kind of be like researching the coronavirus on the internet and self-medicating yourself at home and not trying to seek professional medical advice to try and get help. Some people would do that. Some people it works out fine for, some it doesn't. So it's worth the money up front to save you the hassle later, because what could have been a week-long event is now going to turn into several months, probably, especially dealing with this entity that doesn't exist that now has an employer identification number, plus $150. Who did you pay the $150 to? And who now has your credit card information that you paid? So all kinds of things to be concerned about there. So sole proprietorship, the next level would be an LLC, which allows you to file as a sole proprietor for tax purposes. But LLCs can also elect to be taxed as a corporation. And the reason you would want to do that is if you have more than one owner. So if Dan and I are partners, which we are in a couple businesses, if we're partners, we immediately have a partnership just by doing nothing. We don't have to have a legal contract. We don't have to have an agreement. We don't have to have anything. The two of us can operate. But what a partnership does when I have more than one entity is it requires me to file a separate tax return, its own tax return. And then that income is reported there and then taxed at the individual level, but it still costs you more money because you have to report that. But the lawyers might tell you is that a regular partnership where you didn't do anything and don't have any legal documents is bad, for one, because you want agreements between the two of you. And it's also bad because you don't have any, the way I understand it, have no liability protection there, but you still have the expense of filing an extra tax return. So the next way we might want to take this is an LLC. The LLC gives you the ability to have multiple owners, but you don't have to go through the steps of being taxed as a corporation. You could just file a tax return. So it saves you a couple forms that you have to file with the IRS. Entity Classification Election Form 8832, I believe is the number. So you don't have to file that, but you can file it. And there are certain reasons why you would and you wouldn't. We can get into, if you're interested in that and you're starting to set up a new business, one of the first questions we ask you is, what type of a business is it? If it's a passive type business like real estate, where you and a partner or a couple partners are going to buy a piece of real estate to rent, that might be good to leave it as an LLC taxed as a partnership. If you and your partners are going to create a widget manufacturing facility, you probably want to be taxed as a corporation because it gives you a little bit more. It helps you out a little bit from a tax standpoint in the world of an operating business versus a passive business. So, but there are individual considerations to take into account there. So the bottom line that I wanted to point out was LLCs default to sole proprietorship if you're only one owner. If you're two owners, it defaults to a partnership, which requires a separate tax return. You can also take the LLC, file some other paperwork, and elect to be taxed as a corporation. And if you elect to be taxed as a corporation, there's another election once you elect to be taxed as a corporation called an S election. We're going to go into corporations right after this commercial break. Okay, commercial break's over. We're back. It's kind of like football now. They just take the breaks out, right? No, they add more breaks because no one wants to watch, Dan?
And there's plenty of audience. They're now laughing at
I hope this is exciting for at least one or two of my viewers. Hopefully we've got one or two, or hopefully we end up with one or two afterwards. So yeah, I've got 5. Yay. Thank you, all 5 of you. We appreciate your support. Please like and share.
One's your wife, one's your mother.
Oh, great.
And then, of course, Mrs. Swain will never miss an episode.
Thank you, Mrs. Swain. And I would say click the bell and like, but after this, I promise I'm going to post this video. At the bottom of this video, I'll put the YouTube link there. If you would, let's start following that and start trying to see if we can build that YouTube channel. So let's talk about corporations for a second. Corporations are one of the default animals that have been set up for years and years and years as an entity to help you, again, with liability protection, not my area of expertise. Hopefully we do another show. I'm going to keep saying that because I'm sure my lawyer, Bob's, probably going to give me some sort of disclaimer that I have to have at the beginning or ending of this show. And we'll have Morgan read that for us, a new disclaimer that Morgan can read. Corporations are separate from you. It's a completely separate entity. You'll run the business through it. It'll have its own checking account. It'll have its own tax ID, or employer identification number. It'll file its own tax return. You really operate at arm's length like it's something completely different than you. And corporations, when you set one up and get a tax ID number, you default to something called a C corporation. C corporations are really, in today's world, just big companies like General Electric, IBM, those large, Microsoft, Google, those big companies that have lots of shareholders, and there's no real restrictions on it. I still have a couple of those C corporations, and there are some minor caveats that you have to pay attention to at the end of the year. I think we still probably have a dozen of them that are operating out there. The problem with C corporations is you could get double taxation. So we really wouldn't set a new one of those up today unless we were thinking that it was a company that was going to ultimately go public or grow beyond the limitations of a subchapter S corporation, which is what 98% of my clients operate under if they're in the corporate world. So you set up a corporation with your lawyer. The lawyer sends the papers over to me. We get you a tax ID number, and then we determine that we want to file for a subchapter S corporation. And the advantage to a subchapter S corporation is that I wish I had a whiteboard, but maybe we can we'll go into some of those details on a later show where we actually talk about some of these numbers and the pros and cons from a financial standpoint. So S corporation gives you the ability to have a company that doesn't have its own tax liability. C corporation, a regular corporation, does have its own tax liability. And if it has positive net income at the end of the year, actually has to write a check to the IRS for itself, for its own tax liability. An S corporation gives you a little bit more flexibility in that the corporation has its income and expenses, but then at the end, if you have 2 partners, you divide that based on their percentage ownership, and that number, whatever their percentage of that net income is, goes to their personal tax return, which eliminates double taxation, and it generally would lower the tax rate on that money because corporate tax rates are a little bit higher. So think about that for a minute from a brief segue into political world. When people talk about corporations not paying any tax, corporations aren't just Google's, Microsoft's, and IBM's. They're local businesses. Most of my clients are corporations. So when you talk about corporations that aren't paying tax or getting these big tax breaks, that has a huge, tremendous impact locally. If you increased a business's tax bill, whether it's employment tax or regular taxes, if you increase that tax bill by $10,000, that's a part-time employee or half of a full-time employee. So these numbers really do affect local businesses. And when you think about most businesses that I deal with operate as corporations, and then 80% of people that have a job in this country work for small businesses, that could have a tremendous impact across the board on people's employment, people's standard of living, and really a middle-class standard of living. So that's all I'll say about that. So S corporation gives you a little bit more flexibility, that those numbers flow out, kind of like, and the final one I'll talk about is a little bit more about partnerships, but S corp gives you a little bit more flexibility, lets that pass out, pass the money through, taxed at your individual rate. So that's kind of the basics of corporations and how they work. It's a lot more formal once you get to that level. Tax returns more complex. It costs you more money. So you want to move to that level really when you're ready and your business is starting to thrive and you're growing and you want to add that formality to it. Maybe add some other shareholders so that you can raise capital to grow or expand your business. So those are some of the reasons to do that. Finally, I'll talk briefly about a partnership. So I never recommend going into business without contracts with the people you're going to be in business with, the business you're going to buy, sometimes your employees, depending on the nature of their work. It's a good idea to protect everyone. And I've seen families, friends, marriages, all kinds of things broken up just because everyone didn't understand fully what they were getting into. Now, that being said, even if you do have a contract, it doesn't necessarily mean that anyone read it. The lawyers put it together and hand it to you and you sign it. So it's also good to have details of what everyone's thoughts are ahead of time and put that all in writing before you start going crazy running this business. So partnership is similar to a corporation, except that you're not going to get the liability protection that you could under the corporate or LLC environment. But it's more flexible in a sense that you can start one without doing anything. If Dan and I wanted to start a lawn mowing business, we could take our lawnmowers and knock on the neighbor's door and start mowing lawns together. He could edge and I could put gas in the edger and watch. So it's easy to set up, meaning you don't have to expend money to start it. But again, I wouldn't recommend that. It also gives you the flexibility in that you file a partnership tax return. It works kind of like the S Corp tax return. The money flows through to your personal side and you pay tax there. All of these entities have their purposes. And depending on what yours is and what your business is going to be and where you see that business in 5, 10, 20 years, and how capitalized you are on the start, how much money you have to operate, and how much money you're going to be moving into it, how many partners you have. There's a lot of questions that go into making that decision. I always recommend before you set one up yourself through LegalZoom or any of these other online portals where you can set it up, please talk to your accountant, your CPA, and your attorney at a minimum to find out what their requirements would be and what they recommend. And if you can, I've got a meeting scheduled next week with a client and their attorney to talk about some estate planning issues. If we can meet together, that's always the best, because with the business, the person that wants to start in the new business, any investors that they have, your lawyer and your accountant all in the same room, then everyone's on the same page giving you the same advice, and hopefully you get a cohesive thought, because the lawyer will think about something that I might think about something that he or she might not think about. So it's a good idea to have that team approach to starting a business, because it's always better when you have some more eyes that are giving you professional advice. And then once you move past the startup phase and you're getting ready, then you want to pull in your banker, your insurance agent. All these people play a pivotal role in making sure that your business is successful. And starting everything off right in the beginning will make you that much more capable of being successful as you move forward and grow and want to expand and grow your business into other areas. And we can certainly help with that. You know, one of the problems with the accounting world is that we spend so much time with compliance, trying to make sure that you're compliant with IRS regulations and state of Florida regulations and Highlands County regulations, that it's really tough for us to get in. It's tough for you to see the light, to think that, hey, maybe I need to pull my accountant in for a couple of hours to help me look at my inventory control, or how I'm recording my cost of goods sold, or how long does my inventory stay on my shelf, and how often should I be turning it over? You know, those types of things is what we as accountants would really love to be able to spend more time doing, because it helps you it helps you grow and be successful more than the compliance side. So one of the things I'd certainly like to do, and we do a lot of this, we spent some time at a client's office recently doing some process improvement work, trying to help with the workflow within the office. And that made me sit back and think, hey, let's do that here. So we're going to do that here in our office as well. So again, if you're thinking about starting a new business, if you've already started one and you're not sure, have some questions after the show, please shoot me a message. Hop at my website, carlsonaccounting.com. You can schedule a free consultation right there. Click on the schedule an appointment button, and we'd be certainly glad and honored to see you. And we're so thankful that you joined us this morning for Coffee with Carlson. We'll see you next Monday. I'm not going to tell you what we're talking about yet, But we'll see you next Monday on Coffee with Carlson. Thank you very much, and God bless.